an idea of trade and other receivables, what do we record under trade and other receivables? So what does trade and other receivables account mean to you?
I have no idea, ma'am.
And you said you have an idea, Kim, right? I, I cannot hear you. Um, I cannot hear you properly.
Yeah, ma'am. Sorry. So trade and other receivables is like the debtors thing. So basically, we say debtors control minus provision of bad debts, and then we add, I think, yeah, our SARS income tax if they owe us, and then prepaid expenses, and there's something else that I'm forgetting. But
Uh-huh.
basically, yeah.
Okay, guys, trade and other receivables simply refers to amounts owed to a company by its customers for goods and services provided on credit, right? As well as any other amount owed to the company that are not directly or related to its core business operation. So each and every person that owes you, doesn't matter if they were transferred, like maybe let's say for example, Umpile, you owe me and I owe someone else, and then instead of you paying me, you pay the person that I'm supposed to pay. That's like a transferring of the loan. And yeah, so basically that's just what the account is about. We record all the things that uh relates to people that owe you as a company, right? And in this case, we're going to look at the note, but I'm going to share my screen for you guys to see and the questions that we're going to be tackling today, which is trade and other receivable note. But before I continue, let's see. Uh, let's see, Umpile. Did you receive the questions?
Yes, ma'am.
Okay, Umpile, how about you?
Yes, ma'am.
Okay, no problem. I see we have Naledi. Naledi, how are you?
I'm good, ma'am.
Okay, that's good. Just let me know, guys, as soon as you guys are able to see the screen. Let's see. Uh-oh. Are you guys able to see?
Yes, ma'am.
Yes, ma'am.
Okay, cool. So this is question 2, says statement of comprehensive income and note. And we're obviously not going to be looking at the statement of comprehensive income, but in case if you want us to do it, well, we can always do it next time, right? And you can always challenge yourself to complete these questions that we're not doing, but I'm sending to you so you can check how far you can go with the question. And here we have Mokwana Traders. The following information relates to the financial year ended on 29 February 2024. Mugwana traders. So I'm gonna ask you a famous question relating to this. Wait, I need to change the color. It's too dark. Yes. This. See here, they say, they're saying what? They say the following information relates to the financial year ended 29 February 2024. So I'm going to ask you guys, when a financial year ends on the 29th of February 2024, when did it start?
One March 2023.
1 March 20. This who just answered?
Naledi, ma'am.
A lady. Okay.
Yes.
Why
Mm.
the financial year is important? Financial year of the company is important. Tim, what do you think it's important for us to note the financial year when we are dealing with the financial statements of the company?
Because we have to follow the GOP principle of that everything of within this year has to be recorded this year. So we can't record things of next year or last year in this year's books.
Okay. Okay, cool. Do you have somebody that want to say something else? Nobody want to say something else. Okay, that's cool. So basically, that's it. We are okay. We are following this financial year. Because I'm aware that this does not share anymore. Let me try to adjust my settings. Okay, guys, it's okay now. Let me try to share my screen again and let's see. Okay. Okay, guys, I didn't know how I muted myself, but yeah, I was able to hear me. Guys, are you able to hear me? What's happening? Let's see.
Yes, ma'am, but you are breaking.
How about now? You're still the same.
No, ma'am.
Okay, cool. So they say, oh no, we read that. So I was saying that the financial year um is very much important when you're preparing your financial statements so that you can know where are you going to record whichever transaction that took place in the current year, right? So, like for example, when you are preparing a statement of comprehensive income, you only include expenses and incomes for the current year. Okay? So you're not gonna, excuse me, you're not gonna include expenses slash incomes that does not belong to the current financial. And then when you go to trade and other receivables, remember if you have paid in advance, that means they technically owe you because you haven't received the things. Sorry, you haven't received the services that you're supposed to receive for the money that you have paid, right? And this is what we're going to be doing today. And let me move up there. They say extract from pre-adjustment trial balance on the 29th February 2024. They say balance account section. So this part, guys, this part that you see that says balance account section, this is the section that you're gonna use the most when you are preparing a statement of financial position, which is your balance sheet. Gosh, I don't know what's happening. Eh, yes, so basically, uh, yes. Okay. Yes. And then when you are preparing for your statement of comprehensive, you're going to guys, I don't know what's happening with me. Not necessarily, but my list. Yes. I didn't know where the pen is. So this section, which is nominal account section, this is where you're going to find the amounts that you're supposed to put, mostly in the segment of comprehensive income, which is also known as the income statement, right? Not everything, but almost all the things, right? Not just this part, right? And let's go. We have what do we have? What do we have? We have additional information here. Additional information adjustment says um says what? Says the first one says credit note of damaged goods worth 5,375. And then the cost price of 2,500 rand was not recorded. I'm gonna ask you guys, is this gonna go to the trade and other receivables, or is it gonna go to the statement of um comprehensive income, or it's not gonna go anywhere? It is not gonna go anywhere.
Ma'am, I don't think it's gonna go anywhere.
I don't think it's gonna go anywhere. And that was it, right?
Yes, ma'am.
Um, also, let's hear Naledi. Naledi,
Ma'am,
where are we gonna record the transaction?
in the trade and other receivables.
In trade and other receivables. Okay.
Yes.
Maybe before we say where we're gonna record it, let's have you guys try to explain to me what do they necessarily mean about this? What does the first transaction mean? Adjustment.
So, ma'am, so this is what I think, no? A credit note is something we get from creditors when we purchase from them, right? So that's what I think. So if we received something and then it was damaged, that means we probably have to return it or something. And what's this? Trade and other receivables only affects us for debitors,
Wait, only affects us for?
like our trade debitors. It doesn't involve creditors. Creditors is trade and other payables.
Okay. Naledi, what do you have to say?
Okay, ma'am. I have damaged goods that are worth 5,750, ma'am. And the cost price is 2.5. The 2.5 is not yet recorded, so I must add it.
No, I need to understand. What do you understand with this adjustment?
The credit notes
What do they
must
mean?
the creditors the creditors bring back the damaged goods
Mm.
to the store.
Okay.
Mm.
Umpile,
Yes, ma'am.
Umpile,
Ma'am.
what do they mean here? What are they?
So they provided a credit note of damaged goods worth 5,375, and then the cost price was 2.5, but it was not recorded.
Yes, I need you to explain to me what do they mean by that? What's happening?
The credit note was issued to a customer to provide documentary proof to both the business and the debtor.
Wait, what?
The credit note was issued to a customer to provide documentary proof to both from the business and also the debtor.
So, guys, this information here simply means that a customer bought on credit, but then because the goods were damaged, the customer returned the goods back to us, right? So basically, what happened initially when this person came to the store and bought on credit from us, being who? Who are we? Makamu traders. We issued an invoice, and then we further said that this person owe us. So therefore, this is our data, right? We said this person owed us what? Owed us this amount, 5,000, the 5,375 francs, right? And then again, we went to the stock and said a stock of 2,500 rands, that is the cost price, see, was what? Was sold to this person that doesn't have a name at this moment, right? So that means this transaction right here is going to affect our trade and receivables and also your income statement, right? Which is your statement of comprehensive income. Because whenever a client or customer returns goods, that means what? They decrease the sales, right? Let's say, for example, Pile, you said you sold goods worth 1,000 rands, and then one of your customers says they don't like how the goods were. Maybe they were damaged, or they just don't like them because they don't look exactly how they look online, right? And then the customer sent maybe goods worth 100 rands, right? So now you see your sales will no longer be 1,000, but it will be 1,000 minus the 100 rands, which is 900 rands, because there was um goods returned to us. Do you guys get it?
Ma'am,
Yes,
can you
ma'am.
please repeat what you have said?
So saying um what's happening here? Uh, a customer returned goods to us, name us being the business, right? The traders, right? So what initially happened for a customer to return goods? When we issue a credit note, uh, it would be because somebody bought from us. In this case, this person bought from us on credit, right? So when they initially bought from us on credit, there was a recording of the whole transaction, right? So we said this person owed us how much? Owed us 5,375 rands, right? That is what? That is sales. And again, it's going to be debtors control, right? Because you are selling, that means your sales increases, and then you are selling on credit, that means your debtors increases. All right, you still with me?
Yes, ma'am.
Mm-hmm. So now this person returned the goods, which simply means that they do not owe you that money that we said they owe us. Let's say, for example, maybe this person bought exactly goods that worth 5,375 rands, but the whole goods were damaged and then they returned them. Remember, we said this person owe us, but now we will no longer say this person owe us. Instead, we are canceling, we are decreasing our debtors with that amount because now, remember, when somebody buys from you or purchases from you, you would have recorded in bank or creditors, I mean, debtors control if they bought on credit and the sales. So this transaction over here or this information over here will affect both your statement of comprehensive income and your trade and other receivables, because you initially said this person owes you this much. Now we're going to minus it because they returned the goods, and again we didn't sell that much that the trial not sorry the trial balance said we sold, because now there's been goods that returned to us, so that means our sales will decrease. Whenever goods are returned back by our customer, it decreases the sales, right?
Yes, ma'am.
Mm-hmm.
Now I understand. Thank you, ma'am.
Okay, so let's go up here. Let's go up here. So our trade and other receivables. Mm. So you're gonna have share data control of 70,000, right? And let's see. Before we go far, do we have something that goes into this note, Kim, before we go to record the first transaction?
Debtors control minus
Mm.
the provision of bad debts.
So we less provision for bad debt, which is what? Which is 2010. All right.
Which will give you net trade debtors.
Which is going to be how?
67,990.
There's your net debtors, right? And then again, we have goods that were returned. And do you guys remember what I said about that? What did I just say now about it? Guys, what did I say about the transaction now? The first one. Did you guys forget already? Guys, are you still here?
Yes, ma'am.
What did I say about the first transaction of credit note?
Because that's if a customer bought on credit, the customer returns the good on they return the goods,
Mm.
and then the returned goods will decrease the sales
And
and be issued and record in trade and receivables.
okay, is that Naledi?
Yes, ma'am.
Okay, thank you, Naledi. So what I said, guys, is that whenever a customer returns goods, it will decrease the debtors, right? The debtors control account, because now the people that owe you now are decreasing. If somebody bought from you on credit, only on credit, not on cash, right? So that means the 70,000 that I wrote over there will be wrong. I was hoping for you guys to correct me there, but it seems like maybe you missed the point. And so that means for this, our trade, um, not necessarily trade, but our creditors control will now have what? We'll have 71, 2, 3, that's the 70,000 minus 5,375. And then we don't close the bracket, we're just gonna go through the transactions there to check if there's anything that could possibly affect debtors control. Sorry, guys. All right, are you still with me? Physical stock take revealed that stock cost price of 4,200 was missing, and consumable stores on hand amounted to 3,100 rand. What do you think that this has to do with? Do you think we're gonna record this anywhere in our note? Kim?
No, ma'am.
No. And why do you think
This is gonna affect like trading stocks. So I think since the activity is about trade and other receivables and income statements, I think this will go into the income statement.
Okay, cool. We will skip it because that has to do with trading stock and the consumables. You record consumables on hand in the thingy, in the statement of comprehensive income, and we are not doing that. We are doing trade and other receivables, so that means that is not going to be applicable. Now let's look at Roman figure 3. The bookkeeper has left out a discount of 230 from Angel Traders, a creditor. This was for any payment of account. The bookkeeper left out a discount of 230 from Angel Traders, a creditor. Where is this gonna go? Income statement or trade and other receivables or none?
Ma'am, I think it goes to trade and other receivables because it's a prepaid expense.
Prepaid expense. What is a prepaid expense, Kim?
It's when you pay an expense earlier than you're supposed to, so it's prepaid.
Did we pay any expense before? Earlier.
Ma'am, it says this is an early payment, so it was, and it's a creditor. A creditor is like an expense, so that's why I think it's a prepaid expense.
Okay, no, creditors are not is not an expense. A creditor is not an expense. Um, it's creditor, which is what it is a liability, right? So, in this case, this is going to go to your income statement for discount received, right? The 230 is going to go to your income statement, which is statement of comprehensive income as discount received. And again, it's going to go to your creditors control account, and it's going to decrease the account because the creditor allowed a discount for early payment. It has nothing to do with the trade and other receivables, right? Now let's go to debtors. They think debtors with areas amounting to must be written off. So when you write a debtor off, that means it decreases the debtors control account, right? So we're going to go to the note and then minus again the 3,000 because the debtors are decreasing when you write off um a debtor. That means you're saying now the people that owe you now decreases. Are you with me? When do you guys think we write off a debtor? Guys, guys,
Ma'am,
when do you guys think we write off a debtor?
when they are unable to pay us.
When they're unable to pay us. Perfect. So you write off a debtor when they're unable to pay us, when they're being difficult to deal with, like you've been reminding them to pay you over and over again, when when you've been trying to contact them and you can't get hold of them for like a long time because you can't keep on calling them. That is another expense, telephone expense, which is something that you don't want to do. and many other reason. Maybe let's say when a thing a debtor is insolvent, and in this case we're going to go to our note. Where's the note? Where is the note, guys? Oh, awesome. So we're gonna minus. Oh, what's happening? Oh, okay. Minus a 3,000 again here. Minus 3,000. So that means this is going to change, and this is going to change. Okay. And guys, I don't know why this phone is doing, but are you guys still with me?
Yes, ma'am.
Provision for bad debts must be adjusted to 4% of debtors. Adjustment provision for bad debts must be adjusted to 4% of debtors. How are we going to do this one, my lady?
Can you please repeat the question, ma'am?
Provision for bad debts must be adjusted to 4% of debtors.
We're gonna add it to the provision for bad debts, ma'am.
How so?
Yes.
How?
Or we take the percentage, ma'am. We
Mm-hmm.
calculate the amount given, and then you're
What,
supposed to get
what are we calculating? Percentage? What are you gonna do?
for the total amount that is already there in the table 2010.
Oh, so you're going to say 4%, and what do you do with the 4%?
Multiply
Multiply it. Okay.
with that amount, ma'am. 2010 rent.
Mm. Okay, I hear you. I hear you. And Umpile, what do you think we're gonna do here? They say um provision for bad debts must be adjusted to 4%.
So, ma'am, I think we're going to take that 4,120 multiplied by 4% divided by 100.
Multiplied by 4 divided by 100. I'm gonna
Yeah.
take, okay, Kim.
Ma'am, I think you see the debtors control, ne? Still have to get the total, the 70,000 minus the other amount, and then whatever we get there, we multiply it by 4%, and then we adjust the provision for bad debts to that amount that we get.
Perfect, perfect, perfect. So this is what you're gonna do, exactly how Kim is saying over here. So what you need to do to get the new or the adjusted debtors control, ne guys. So you need to now calculate your new debtors control amount, because now your control amount is no longer 70,000 because there has been adjustments, right? So what you're gonna do, you're gonna say 70,000 minus the 5,375 minus the 3,000, and then you're gonna get your new debtors amount. And then with that new debtors amount, you're gonna multiply it with 4%, because you want to know the new provision for better. They said provision for bad debts must be adjusted to 4% of debtors. So they say 4% of debtors, not 4% of the provision that you have been provided, which is 2010. Do you guys get it?
Yes, ma'am.
And how much is the new debtor control amount?
61,625.
61,000.
625.
And is everybody getting the same amount?
Ma'am, that's 5,375, right?
Mm.
Okay, yes.
Naledi, how much did you? Umpile?
59,160.
9,000? Umpile said 59,000?
160.
59,160 and Naledi, who you guys got amount. That means you guys need to recalculate and what you could have probably done wrong. So Umpile and Kim. So on your calculator, you should be having 75 minus 5,375 minus 3,000. And what is your answer now?
Did you say 75,000, ma'am?
70,000 minus 5,375.
It's
Ma'am,
61,600.
I'm still
60.
getting 61,625.
Yes, ma'am.
Okay. And now that means this is going to change because there has to be adjustment made, right? So they're saying that what? They're saying provision for bad debts must be adjusted to 5% of trade debtors or debtors, right? So that means you're gonna take this amount over here and then you multiply it with what? With 4 over 100. And you're gonna get the new or the adjusted provision for bad debt, which is
2,465.
2,000.
No, 2,465. Yeah.
Okay, and Naledi and Umpile, how much are you guys getting?
The same amount, ma'am.
Same amount. So now we're gonna
Yes,
have
ma'am.
new net debt, is what? Which is 61,125 minus 2,455. And how
59,160.
49?
59.
Okay. 59.
1,160.
And somebody wanted to say something, or is it the same amount as you guys?
Yes.
Yes, and that's absolutely good. Now let's go to the next transactions or adjustments. And wait, okay, debtors amounting to provision we are done. They say insurance of 9,300 was fully recorded. That amount was paid for the period of 1 January 2024 up to 30 2024. So that the insurance was paid for months from 1 to 30 June before got muted. If you can mute your mic. Yes. And let's see. They say what? They say 9,300 was fully recorded and the amount was paid for 1 January 2024 up to 30 June 2024. So if you can see here, there has been a prepaid expense scheme. Can you see that? Because the expense on the insurance expense relates to a 6 month period starting on the 1st of January up till the 30th June 2024. And the financial year ends on the 29th of February 2024. So that means March, April, May, June, which is 4 months, does not relate to the current financial year. Therefore, that means that is a prepaid expense, 300 rand by 6, because you want to know how much is insurance expense per month. All right. So that's the first step that you're gonna take. Uh, Naledi,
Ma'am, did you ask a question? We didn't really get that because you broke a bit in the middle.
I, I is it fine now?
A bit, a bit.
Still the same now?
Yes, ma'am.
Okay, I'm not sure what's the problem, but let me continue. So I was saying that for this one, you can tell that there's a prepaid expense, which is insurance, right? So insurance was paid for 4 months. Um, which does not belong into the current financial year because they're saying the insurance um, was for a period of 6 months, which started from the 1st of January 2024 up until the 30th June 2024. And our financial year ends on the 29th February 2024. So that means March, April, May, June, which is 4 months, is going to be regarded as the prepaid expense because we paid before we can use the expense. Okay, so now that means we are going to divide the 9,300 rands with 6 because we want to know how much is the insurance per month for 6 months. Are we clear?
Yes, ma'am.
So we can divide by 6 and how much do we get?
1,550.
This is going to be the what? The insurance expense for each and every month for 6 months. So are you going to multiply by 4 because you want to know how much is going to be the insurance amount for 4 months, right? And you know, 1,550 multiplied by 4, which is going to be for a period starting from March up until June 30th.
6,200.
6,200, guys. Okay. And this is what this is. prepaid. You said how much?
6,200.
Okay, let's go and check if there's no any other prepaid expense here. Let's see. Rent income was increased by 10% on 1 September. The rent for February. This is going to be income statement. The bookkeeper recorded 80,500 as additional fixed deposit on 1 October 2023. Where do you guys think it's gonna go? The bookkeeper recorded 80,500 rands as additional fixed deposit on 1 October 2023. What do you guys think? Is this gonna go to the note or not?
I think it's gonna go into the income statements, man.
Okay, so basically it's to our the note, our trade and other receivables, because it has nothing to do with trade and other receivables. And then we will go to depreciation. Depreciation amounting to that for the year. That has nothing to do with us. And then the loan statement. Let's see. They say balance on 1 March is this, and then prepayment of loan, including interest, is this, and then the balance is this. So in the note, we don't have anything that has to do with loan. Obviously, this is receivables, not the payables. So we are not going to look at that. And then they say operating expenses amount to of the adjusted sales. Operating expenses amounted to of that. Where do you guys that is gonna go? Let me see who's in here. Where do you guys think that is gonna go to? Does it affect the note or not?
It does not, man.
It does not. Hmm. Okay. Um. Let's see. It does not. That was Kim and Ompile. What do you say?
Does not affect anything.
It does not affect anything. Okay. Naledi.
It doesn't affect anything,
Not
ma'am.
what?
Yeah. Yes, ma'am.
What did you say?
It doesn't affect anything.
It doesn't affect us. Okay, cool, guys. Missed a point there. Roman figure 7. Is it Roman figure 7? If you guys can see, I confused it with rent expense, but it's an income. Remember, um, Kim highlighted that on the note, we're going to record your debtors control provision for bad debts. Then that will give you net debtors. And again, you're going to add your prepaid expenses and accrued income. So if you have an income that maybe the services has been provided, but the income has not yet been received, that means we're going to have to account for it. So the rent income, as I said, that the rent for February 2024 has not been received. So that is going to go to your income statement, and again it has to come to the note as your accrued income, and we'll try and do it next week when we meet because we're already out of time. Okay, guys. Let me see. Do we have anybody who have any questions? Let's see. In Aqua, we'll